In this video, I'm going to walk you through December 2025 and year-end review for Ottawa real estate market using the actual Ottawa Real Estate Board's graphs. So you can see exactly what's happening, not just hear the headlines. We'll go step by step through sales, listings, inventory, prices, and then break it down by property type, so you can understand what this means if you're buying or selling heading into 2026. DM me and comment interested to get your curated Ottawa neighborhood stats in the area that you live in, as well as your street level stats, to understand the market trends, prices, days on the market on your particular street. Let's start with this first graph showing monthly residential sales for December only. What you will notice is that between December 2024 and December 2025, the units fell from 626 to 587 units. From November to December, the units sold fell by 32%, declined month over month. Now, this is important. This is not a market shock. This is normal December seasonality. If we exclude the pandemic years of 2020 and 2021, which were extreme outliers, the average December since 2018 is about 583 sales. So this year is almost exactly on trend. December 2025 sales stand at 587 units, sold in Ottawa. The key takeaway from this graph is not weakness, it's buyer caution combined with seasonal slowdown. People pause over the holidays, and that's exactly what we're seeing here. Now, let's zoom out and look at the full year's picture. At total sales and total dollar volume for 2025 versus 2024. Even with quieter fall and winter, total sales finished 1.3% higher than last year, and total dollar volume finished 4.1% higher. That tells us something very important. 2025 was not driven by frenzy or speculation. It was driven by steady, fundamental demand. People bought homes when it made sense financially and personally, not because they felt pressured. Let's consider new listings and active listings. Active listings fell from 3,628 in November to 2,544 in December. This is normal for the holidays. But there's a bigger story here. When we compare December 2025 to previous years, inventory is still much higher. So you can see 2022 is this, and then 2025. Active listings are 19% higher than December 2024, 45% higher than December 2023, and 89% higher in December 2022. This tells us that Ottawa has been in a multiple-year normalization phase, slowly rebuilding inventory across all types of properties. Months of inventory rose to 4.3 months in December. For context, under 3 months it's seller's market, over 6 months it's buyer's market, around 4 to 5 months it's balance market. So what we're seeing here is Ottawa moving closer to long-term pre-pandemic norms. Buyers have more leverage and more choice than they had in years, but sellers are still seeing steady demand if they price the home correctly. Now let's talk about this graph. This is new listings in December only. So you can compare it through the years, and you can see that in 2024, we had in December new listings. These are listings that come to the market in December, 582. And in 2025 December, we had 644 listings. Now let's talk pricing. The benchmark price for single-family homes in December of 2025 is just shy of 700,000, with 38 days on the market And as we previously discussed, 644 new listings. The benchmark price for apartments and condominiums, it's around 387,000. In December of 2025, 587 properties sold, and total active listings are 2,544, as we have seen on the previous graphs. The benchmark price has been gradually declining month over month since the summer. This tells us two things. Prices are adjusting slowly and controlled, not sharply. Two, average prices are being supported by what types of homes are selling, especially detached homes. This is what soft landing looks like in real estate. Now, let's break this down by property type, because this is where the differences really matter. Detached homes. Detached homes remain the most stable segment. Inventory is around 4.3 months, and the benchmark price is actually up 0.4% year over year. Limited supply and consistent demand are keeping this segment strong. Townhomes. Townhomes are adjusting more. The benchmark price is down 3.7% year over year, while the average price is only down by about 1.4%. That gap tells us buyers are being more price sensitive, but demand, especially from first-time buyers, is still there. What about condos? Condos remain the softest segment. The months of inventory are close to 8 months, which puts it squarely in the buyer's hands. This is well above balance levels. Prices are under pressure here, though Ottawa still looks for healthier than larger markets like Toronto or Vancouver. Toronto and Vancouver has more than a year of inventory. So Ottawa at 8 months is still doing pretty good. December confirms what we saw all through the second half of 2025. Ottawa is in a stable, balanced market, except for condos. Any improvement in 2026 is likely to be gradual. Interest rate relief helps confidence, but buyers are still careful, and sellers need to be strategic and price the homes correctly. If you're thinking about buying or selling this year, the most important thing is understanding how these trends apply to your specific property, type, and neighborhood. If you want help breaking that down, feel free to reach out. I'm Tomasz R. Witek with eXp Realty, and I will see you in the next video. DM me and comment interested to get your curated Ottawa neighborhood stats in the area that you live in, especially at the street level.